So welcome to today's London to New York crossover with Harmonic Scanner. Nice to see you all, Kathy, Sabine, Thomas, Brian, and we'll get started. So let's just share the screen. And let's have a look at what we've got. So if you are on the 7-day free trial, then you'll be in the Financial Freedom Movement group. So make sure that you go through the units. And then when you join, or if you decide to join us, you'll come to this login, which is the im.center, and you'll find academies in there and Pip Talk, where all the top educators post from our Go Live TV channel, and also the strategies and products that we use. And you'll see at the top of the tab, I've been looking at the Harmonic Scanner. So I was just drawing up this before we came on, so I'll just start with EuroCAD. It's a very nice scan. It's engulfing a previous one, and when you see here that this A point has crossed this exactly, picking up the same point as the previous scan, it empowers the scan. So it's very good when you get scans crossing over each other like that, and you can see it's making its way down very nicely. So I've just drawn on, I thought I'd drawn on the pitchfork. If you just bear with me, because the phone rang and I was right in the middle of just going down to the 1 minute. And I know Brian and Kathy are ahead of me on scans. I only did one trade yesterday on EuroCAD, which was that, well, no, in fact, the last trade I think I did was with, on Chance's session. I didn't trade yesterday, so I did EuroCAD in the London session for 20 pips on Wednesday morning. So you come down to the 1 minute to make sure it's on the highest point. And this is because it's drawn, this is a hybrid analysis, and we're taking the 1 hour time frame analysis. I love this scan because you've got quarter theory coming across from that D point, and you can see, look at those rejections, 1, 2, 3, 4, 5, 6, 7 rejections across the pitchfork and the quarter theory, and then there's that wonderful, magnificent drop down, absolutely superb. So what we do is we come to the 1 minute, and this is how we get our precise entries for this 10 pip stop loss. And if we were on the hourly, we'd only have one candle, and there we are, we place it on the highest or lowest candle. So just let me finish. I won't be able to obviously get up to date with all the scans that there have been, but we'll start off. I know there's no news today or tomorrow, which is a bit unusual. So we're going to look at the hot pairs for this session because we're in New York. So as you would expect, you look at the currencies that relate to that session first. Well, I do anyway, the hot pairs, which for New York will be your USD and your Canadian dollar, CAD, CAD. And then you can trade any pair, but it's just that the hot pairs are the ones where the sun's up, where they're being traded and spent, and it's good, I think, to start with those first. Just put that on magnification so that it, for some reason, and I promise you I haven't been drinking, my right hand is shaky today. I mean, and I'm not ill either. So it must be excitement because I wasn't on yesterday. So there's the A point. There we are. Oh, and also I've just carried a heavy bag in. It might be that. Right. Where's our X point? This is a big scan. It's 200, I think it was. And we'll just see where the next trade is on this one. That's it. So that's on. So once that's the only fiddly bit, but it means your pitchforks are valid forever. Do check back if you are trading on fold scans to make sure that they haven't glitched and that you can pick up some of the candle wicks onto the actual pitchfork. Just check it is still being true to the pitchfork. And let's get that back on the 1 minute. Right, so that's our EuroCAD. And let's see what that's. So I've locked that on. And let's come back to the, that's why, didn't have it on minimize. Okay, so at the moment it's in the middle of nowhere, so there's no trade for us at this moment because we must have as one of our rules a pitchfork touch, and we don't have a pitchfork touch. The distance between each pitchfork leg on this one is 73 pips. So this is where we get the exception to the rule, because if it's over 60 pips between your pitchfork leg, normally we have a rule. Off the D point, we will only be taking a trade in the direction of the scan down until it hits the median, which is this solid white line here. But because it's over 60 pips, and that would apply, we only draw scans of a minimum of 80 pips, which gives us a minimum of 20 pips per leg, which gives us our 2-to-1 risk to reward ratio with a 10 pip stop loss. But because this is 73 pips, that means that we are allowed to take a buy trade if we wanted to, and also a quarter theory trade if we wanted to. But you still have to have your 3 confirmations for the trade. So we'd look at the trend line. We'd look at what it's going to do at quarter theory. So let's put a trend line on. Yeah. Whoops, that's not. And we'd be looking for a break of the trend line.
You've got your magnet turned on still.
Oh, that's
why. Happened to me the other day.
I wondered what I was thinking. Why isn't it playing up? So
it's not your hand.
Yeah.
Did you say, Sarah? I've just ran back to my computer. Did you say that when the pitchfork prongs are more than 60 apart, I know that you can use the quarter theory, but I don't think I've ever heard you say that you can take a trade in any direction,
yes.
even if it's not reached the median. Oh, that's what.
I'm sure
I've missed that somewhere along the line. That's brilliant. Okay.
Yeah, I'm sure that Brian will correct me, but that's my understanding as well from what Chance has said. I'm pretty sure I'm correct on that.
Oh, that's good. Great, thanks.
Yeah, because if you think about it, you've already broken one rule by saying, well, you can take a quarter theory, without it having a pitchfork touch. So, what you're saying is that the quarter theory is taking precedence, and therefore, you could, because we don't know when it reaches the quarter three, because we're always working off key levels, aren't we? So when it comes up here, we don't know if it's, at the moment, if it's going to do that. Price can only do 2 things, whether it's going to reject off that quarter theory and come back down, or whether it wants to do that, something like that. So because it's 60 pips, we have to look for those other confirmations. And he has said we can take, a quarter theory. And to me, that means you can take a buy or a sell as well, because quarter theory is 50 pips, yeah? So where would you be going at 50 pips? You'd either be going on a buy or a sell, wouldn't you? Yeah? Does that make sense?
Yeah, if it was a large scan and it was at a pitchfork, so say if it wasn't, I think
you could still take, if it was at a pitchfork and it's over 60 pips, yes, you can still take your buy or sell. I think don't overcomplicate it, keep it simple. Over 60 pips, take a buy or a sell and a quarter theory. And I'm pretty sure, honestly, I would have remembered if it wasn't what I'm saying. I don't think I've quite that.
Written that down, so it's cast in stone now, Sarah.
I could well be proved wrong. It has been known, but so what else can we do with this? Well, we haven't. I'm just wondering if because you might be able to put a fib on this that it's going to come. I'll try that. I'm sorry for new people. Bear with us if it all sounds like double Dutch, Chinese, whatever. it does become clearer after time. So fib retracement, if I put a fib at that height, that's the highest point there. If I put a fib, and I will put the magnet on for that, if I put a fib there, down to the low point, there's the 0, which is going to be there. So in this case, we'd be looking for it to come up to the 61 or up to this pitchfork, which would bring it up to that 78.6 area, and then do a reject off. And if anyone wants to chip in and you know, say what they think, you're more than welcome. So I'm wondering if that is what we're going to be looking for. So up at quarter theory, up to the 61.8, or probably back up to the pitchfork. I don't know, because sometimes it doesn't go all the way back up. It'll just come up to this level here, the 61.8, and retest that 15 and then drop down. So, you know, it's the analysis of what you think it's going to be doing on these bigger scans, isn't it? So in terms of marking up an alert, because obviously we never sit and stare at this sort of thing, it just, all it does is waste your time, drive you crazy, and there's no point. So I think what I'm going to do is put an alert at quarter theory and then have another little butchers to see what it's going to decide to do at that point, and then we'll move on to another one. That makes sense for everyone. And what I like to do on alerts is extend the right line here, then it goes on ad infinitum. I always have my alerts in pale blue. If you keep your different lines in different colors, then it means the brain doesn't have to consciously take you away from the analysis of the trade and the confidence to get in the trade, because you're not thinking, oh, I've done all my lines in blue, which one is a trend line, which one is an alert line. So I always do my alert lines pale blue, then my muscle memory kicks in and I don't even have to think, what is it? I know it's an alert line, and then obviously I'm going to put the alarm on it, which you won't have on the free version, but on your phone you can get a free call app thing for alerts. But I think it's worth I think it's $16 a month, the cheapest paid version of TradingView. Personally, I think it's worth it because you can put on more indicators and the alerts, and you'll get this replay function for your back testing, which is hugely important. You'll never get to be a good trader unless you spend time back testing. I had someone say to me quite a long time ago now, they said, oh, I haven't got time for back testing. Well, no sportsman plays any sport without replaying or asking their coach to go over what happened in the match, the tennis match, the football match, what could we do better. Trading's exactly the same. The markets will teach you more than any person can teach you. So I love that replay button. So that's EuroCAD. We're going to be looking at it at 1.553,000, which is quarter theory. Just going to write that one down. 3,000, but we'll see what happens there. It's always great fun, I think, to see, because if you start practicing like this, I started off the same way, and you know, and it does what you think it's going to do. It's enormously confidence building, because you think, oh wow, you know, my analysis was right. Oh, it did do that. And if it doesn't do that, then all you need to say to yourself is, oh well, the markets do what the markets do, which is true, as we know. So that's EuroCAD. And now I won't have, and if there's a latest scan on GCAD, I won't have this because I haven't done any drawing up yesterday. So there've been so many scans. Kathy or Brian might be able to tell me if I've missed anything on GCAD. Probably have, looking at this. Let's have a look. Ah, that's okay. 23rd of June. So that's good. I haven't missed one then. Let me come down to the 1 minute. So what we've got here is a sell scan, and it hasn't even reached the median. Now, if we measure this one, it is C to D 182. So that's about 40 to 50 per pitchfork leg 45, so you don't need to, so we're only going to take a cell until it hits this solid white line in the middle, and at the moment it's stalled out along the D point. Now I expect that D point, that's why I've got a yellow blob there. This is redrawn, so I'm going to redraw this D point because it's made a higher up there at quarter theory.
Well, the harmonic scanner didn't redraw this one at all, so I kind of left mine where it was in the original location, because price moves in and out of pitchforks all the time, right?
Yeah, but I would redraw that, Brian, because it's always highs and lows, and it's most definitely formed a very nice D point right off that quarter theory. That is the harmonic to me. It's just the harmonic scanner hasn't caught up with it. I mean, again, you know, I could be wrong, but that's how I will be trading it, because that looks right to me. I mean, I may be talking out my hat. It has been noon. And that I could look at an old scan to see where what else is playing through there. I can see a green one. What else is playing through that other one you were looking at then? So settings, let me see where this green one is. So I've got a green one that's going through your old D point there, and that is at, that's a big one, isn't it? And that's this one, D to C. So there's a much bigger scan sat behind it from the 11th of June, and that is 293 pips divided by 4. So that's about 75 pips per leg. So that is an engulfing scan, very powerful one. So I think both of us would be safe. You'd be safe trading at your original D point. And I'm quite happy with that one up there. And they're both, you just have to pick one, because they're both, you might not, well, you will have that one the 11th of June, but they're both the same direction. And you just have to choose which one you want to trade off. But you can see how they're helping each other, they're respecting each other. So personally speaking, I feel comfortable moving my D point. It's quite hilarious, really, because I expect we'll go on Chance's session and you say, "Oh, Sarah, why did you do that?" But I've done that before successfully, so I'm going to look at it from that point of view. So I'll just come up here on the 1 minute. And we've got, so when you start this strategy, you just need to chunk it down, break it down. So we have pitchfork touch is mandatory, and you've got 1, 2, 3, 4, 5, 6. And there's another reason that I quite like what I've done with this scan, because it's still respecting, you know, respecting the points, Brian, isn't it? Even though I've moved the D up, it's still, oh, I need to move that to there. Let's just lock that on. And you know, it hasn't made a lot of difference, because it's still respecting it down there. I've got all those touches along there and here, so I still like the look of that. So when you start to break it down, whichever scan you're using, you've got pitchfork touch. We've got the orange across the blue, although I see it's dipping down now. That is saying buy. It's coming back to that quarter theory point. And we need to look at what our trend is doing. So our trend is an upward trend at the moment. Although it's gone a bit wobbly here, but let's see if we can draw a trend line on. So anchor your trend line, always anchor your trend line on a point, and then you want a minimum of 2 to 3 touches, 3 preferably. So I quite like, think I quite like that. there. And then my trend lines are always green, so I need to change the color. I was looking at the graph from FX Street's 2020 economy with the GDP shot to pieces, as you'd expect across the world. So sometimes you read that sort of thing and you think, you know, it kind of affects you on the trading. You wonder how the market's reacting. I try not to think about politics when I'm trading, because I think we've got enough to think about on the technical analysis of the trade without bothering to try to predict how the markets will react to certain news. So I've got my trend line anchored. I've got 1, 2, 3, 4, 5, 6 good touches. It's breaking down through that trend line now. It is above quarter theory for a buy. It's still technically above the 62. So that's 2 confirmations, and we've had 2 rejections off quarter theory. And
I bet you have a fib off of that spike to the left there.
I knew you were going to say that. You beat me to it. From here.
Yep.
That's brilliant. Let's have a look at that.
Boom.
Yeah, beautiful. That's just coming up to that 61.8, and we've got the downward trend forming. So the market's always forming different channels. So here we've got lower high, lower high, lower high. Okay. Here we still have higher lows here, but as Brian's quite rightly said, put a fib on it, and here you can see the reversal back to the 61.8.
Hey, you got a 78.6 on the other peak.
Yes, that's good. Yeah, so it could be the 78.6 rejection then. So in that case, in order to trade this, we would want to wait for, if we're saying it's a rejection off it, that's a, oops, I've got my, you do need to put your fibs on precisely. They must be precise to the end of the wick of the candle, and the high to low for a sell. So 70. So it's not quite, because I've missed the end of the wick up there, Brian. So it's missed that 78.6. It's just slight bit of slippage through the 61.8. But I'm probably happy to go with that, although it's not technically that precise, is it? Would you go with that, Brian?
Well, I'd wait for the price to come down closer to the pitchfork.
Oh yeah, no, I agree with you about that. That it should, if we're looking at it now for a sell off that.
Right, and then by the time it gets down to the pitchfork, you'll probably have a 1 minute recent trend to give you a third confirmation.
Yeah, but remember, wasn't this a big? What was the level between the? You have got 62.7. It's quite a big scan.
You could take a quarter theory trade here shortly.
Yes, I think so. So under the 62, but under the quarter theory. So, and sometimes it doesn't always, it's not so important for it to break and retest the quarter theory as it is to break and retest the pitchfork, where we usually say no retest, no entry. But let's put a slider bar on this one then. So, and I can see just running below quarter theory as well, Brian, 2 old pitchforks. I've got a purple and a green there. You probably can't see them.
I barely see them now.
Yeah.
But so that's telling you something.
So that's telling you something. It might be worth waiting those few pips just to make sure it does clear. They are 3 pips away. Okay, so I'll put a slider bar on this one for a short position. So I'll put it on, I'll stick to our rules and I'll put it on quarter theory, I think. I can see the 62s curling up. Now, GCAD is a fast pair, so we do like 15 pip stop loss on our GBP pairs. And then our level for take profit, settings, inputs. So entry price 1 point, GCAD 1.69500. 3 pips below that, you've got 2 pitchforks coming across. So you might want to enter when you see it's down below 1.69996 or 997. Yeah.
No, 6947 maybe.
694. Thank you. 694. What's 3 pips off that figure?
7.
497.
Thank you. Thank you. You see, I've always said to you, if I can do trading, anybody can. Maths is, I can do that quick maths, like pitchfork divided into 4. But right, there we are. So we've got a stop loss of 1.69650. Entry we've just discussed, and take profit levels will be at your 20 pips, which is your trade goal. That's our, well, usually it's 2 to 1, although as we know we have to have 15 pips on the GBP pairs. So take profit technically will be 1.69303, but with this strategy we're always going for the levels. So we would go for this 0% off the fib, which gives us 25 pips at 1.69250. And then down to minus 27 is our take profit 2, which would be 40 pips at 1.69093. And then you've got quarter theory, so it's a zone because price will always want to move between levels. So that's 50 pips down to 1.69000, which is your 50 pips. And I can see an old pitchfork, that purple one's running through down there.
Sarah, what's the entry again?
1.69500. That's
Thank you.
quarter theory. You're welcome.
Sarah, could I ask which may be a silly question then? I'm really trying to learn this.
No questions silly, I can assure you.
Well, you haven't heard it yet. But why wouldn't you expect the price to respect your quarter theory and also your trend line? Are you looking for a sell from the 69500?
Yes.
Could that not bounce off that?
Well, hang on a minute. Let me just put that alert on.
Sorry.
Yeah, no, that's okay. Because we've got the fib reversal, and Fibonacci is based on the Elliott wave, which is how the market works. So
Right.
if I draw an Elliott wave is 1, 2, 3, the long extension leg, 4, 5, and we're looking for those reversal points. So,
right.
So as this is a sell, sorry, I'm drawing lines across this. An Elliott wave going down is 1, 2, 3, 4, 5. So
Okay.
what Brian and I have just been discussing is the reversal of the Elliott wave. So the reversal of the Elliott wave from the fib here drawn, these are Chance's fib settings, and his favourites are the 88.6 or the 61.8. These are the biggest boomerang effects. If you get a fib reversal off the 88.6, that's the long extension leg that usually forms the new harmonic scan. That gives you that lovely long run up or down. So in this situation, the reversal is this Elliott wave coming down here and that reversal. So we don't know which one it is, and often you don't know while you're. It's very hard to spot Elliott waves while you're in them.
Yes.
So we're looking. So we don't know whether we're in that one, that reversal, or that one. But what we do know is that you could draw a tiny fib there, but there'd be no point if you see what I mean. It's far too small. So it's always the nearest one, high to low for a sell, or low to high, and then they fade away. They form a new one, a new fib. So they are not valid the whole time. They're only valid at this point in time, but you never put a fib on current price. Okay?
Okay, yeah. Thank you, Sarah.
So that's the whole principle of it, the fundamental movement of the market on the Elliott wave. And I'm just going to get rid of my extra. We don't need any more of my scribbles.
Yeah, we're just waiting for breaking a retest of the quarter three then.
Well, yes. I was thinking because I always like to be safe on these calls, because it's up to everybody to. Hang on a minute. It's up to everybody to make their own decisions on the trading. But you know, you have to judge it, don't you? Because as we know, Connor, sometimes price doesn't do a break and a retest off quarter theory. It just kind of carries on down, doesn't it? So
Yeah.
you kind of have to make your own judgment. So if I had, so number one, I've got that fib retracement. Number two, I know it's a fairly new D scan. I'm happy with the fact I've moved the D point. And if it's below the 62 on a cell D scan, you've got the fib reversal. I might not wait, you know, I might not wait. It's safer to wait for it, especially as we've got those two little old pitchforks running underneath it, 3 pips below. Okay, so probably me personally, because I'm quite a conservative trader, I'd probably wait myself to get that rejection there, just to make sure it doesn't want to shoot up, and then take it on the turn down. So I think, yeah, I think I've just taught myself into, generally speaking, I like the break and the retest, because I have been caught out where I've gone into things either off quarter theory, well, pitchfork, I don't do it anymore, but on these fast pairs, sometimes even on a pitchfork, it seems to just shoot straight down. We had one the other day where I said, wait for the break and retest. It shot straight down, but someone did actually get about 8.5 pips off it, I think, in the end. So I think wait for the break and the retest, just to make sure it's cleared those two pitchforks and done the rejection. But GCAD's a fast pair. But you want to see that 62 coming below as well. You want price below that, okay? Yeah, does that make sense? So I'm going to move on to...
So the 62 EMA crossing the 930 EMA?
Yeah, we want to see that 62 must be pointing, we want price below it, and we want to see that 62 coming down.
Okay, thanks.
Otherwise it's still pushing price up, because the 62 will always act like a ceiling or a floor. So it's here, you see how we can take that trade down here, because the 62 is shoveling price down, it's pushing it down. So price flows, it comes back and retests it, comes and retests it, comes and retests it, slips through a bit, still below, so you're still safe for the sell. All those rejections off the pitchfork. As soon as price comes back up here, then, I mean, we wouldn't be taking it there, but then you know that price is on the way, is buying, because it's above the 62. And there's the slippage through to retest the 15. And now it's still pushing up now. So we need to see how we need to see it respect that 61 and reject off it and come down again before we get into it. It does seem to be forming those lower lows though on that trend line. Yeah, does that make sense?
So Sarah, your TP1 is about 20 pips down where the pitchfork is.
Well,
All right.
I just do that. Yeah, correct.
Like 0.00, that's where the
I do. I always set mine at just as a visual for me. Although on this strategy, we're always trading on levels. So when we put a fib on, we'll always have the 0 as our take profit 1, the minus 27 as our take profit 2, and the minus 61.8 for our take profit 3. But in between that, we will look at zones. So this is our zone for take profit 1, because we have the 0% fib and the pitchfork together. And our favorite take profit level, our favorite one, is where a pitchfork and quarter theory meet together. So that, although I got it at 20 pips, I would be looking to close that trade at, oh, I've got the brush mark on again, at about the 25 pips, yeah. Because that's that level, and price will always move between levels, and it will want to go to that quarter theory. So I'd be looking, I wouldn't close out at 20 unless I saw it stalling at that level and turning. I'd be trying to get it to that 0 at call it 25 pips, 24.4. Yeah. And then looking to see what price is doing. I'll be following the next level down to that quarter theory. And then there's the 61.8. So I'll be looking at that. And then I can see a pitchfork just below that, an old one there. And then that level, but we don't know if it's going to, you know, turn before then.
Yeah, that makes sense.
Yeah, that's how it's a lovely visual dashboard. And the good thing about trading on the 1 minute is you don't sit in consolidation, because there's not a lot of consolidation on the 1 minute. The trade's moving or it's not moving. So it's that's why I like the 1 minute. It gives you the opportunity to use a very small stop loss. You're not stuck for hours in consolidation, and you're just looking, you know, bang to, you know, get your levels, get your percentage and get out. And yet on these bigger trades, you can also technically you can, you know, you can swing trade by stacking in at these next key levels, particularly the quarter theory level. So that's even more powerful because you've got no drawdown whatsoever, and you know, you know, you can scoop up 50, 100, 150 pips if you get it right. Okay, so that's GCAD. I think I removed my line. I was gonna just had I wanted to have an alert on there just to, and I'm deliberately not putting the alert on quarter theory because sometimes I forget to switch them off. I just put an alert on like that and move it along in case it goes off while we're on the call. Right, let's move on to something else. USDCAD. Have I missed any scans on this one? Does anyone know? You see when my last one is. So my last one was a buy scan from 23rd of June, still on its way up. So can you see clearly, guys, the Elliott wave here? Look at that. 1, 2, 3, the long extension leg, 4, 5. So it's just coming to form a new scan there.
That's pretty much the current scan I have there, Sarah. Nothing's come up newer for UCAD.
Okay, look, 1, 2, thank you, Brian. 3, 4, 5. That's your Elliott wave. So if we had put a fib, couldn't have put a fib on there. Actually, a fib wouldn't have worked on there, would it? I don't think a fib would have worked. Just trying to show you where I could have put a fib to see, but that drop below there, so it would have been below the 100%. It wouldn't have worked for us on there. So let's come down to the. That's good. I was worried that I'd be really behind today. And I think that's the thing about trading. It is a skill for life. So as Chance said the other day, he said he didn't think 4 years ago, because he didn't really understand it. He knew he wanted to do it, but he didn't think he'd still be trading in 4 years' time. And by that, he meant the kind of the skill for life aspect of it. But it is a skill for life. So he said he'll still be trading in 4 years' time, and then the 4 years after that. And I think that's, to me, is the pleasure of it, and why you don't want to sort of overtrade. You just want to get the money you want out of it, compound it, and then get on with other things. Because a lot of people don't even know that he trades. Now, this is interesting. I like this one because this is a buy scan. So what we've got here is, now this is the Sydney-Tokyo. Sydney and Tokyo, call it combined. That's the close of market Sydney, and then into Tokyo, there's your open of London. So a big drop down there. So throughout, so we had the rejections off the pitchfork there, and then in Tokyo, it just kind of, you know, sidled along really, didn't do an awful lot. That often happens in Tokyo. The fake out at the open of London, where you can often grab pips. You could have caught a nice little trade there. That is good to bag some pips. If you know how to play it, it's very good to bag some pips, but just coming up at that open of London. And then if you can get your 20 pips in the bag, then you can afford to be a bit more risky on trying to swing some of the bigger ones to really increase your account. So that trade would have been 23 pips. So you had the pitchfork touch, you break two breaks and retest there, and of quarter theory altogether. Very nice little shoot up there, although it was, so that was just after the hour. So the only thing that might have put you off is, you know, it is I'm always saying don't get into trades just before the hour. Well, that is just after the hour. So wait for that down, and then you could have got in there, bang, up there. Very nice. And then you've got a sell, you had a sell trade there at 9 o'clock UK time. You could have gone back in there off that quarter theory down here. It went 26 pips. So you would have got your 20 pips if it had reversed on you, tested the 62 and you were still in it. As soon as you saw these lines all in a row here, stalling out there, then you should have been getting out there, but that would have given you where it started to cross back up above the 62. I would have been out at that point, and that would have given 20 pips. No, there's no trade there. So coming up here, we've got a trade entry coming up because we've got rejections, break and retests off the pitchfork, break and retests off quarter theory. It's just coming up now to touch that quarter theory again. So if it rejects off there, then we have got a sell there as well, because it does look like it's forming, well, it has formed lower highs there. So let's magnify this, see what we've actually got, see what everyone thinks of this trade. So wait for it to come below that 62 there. You want to, because you see what price is just trying to push up.
I'm sorry to interrupt.
Oh, you're very welcome.
Can I just check that I don't know if I'm reading this correctly, but it looks to me like that GCAD has just broken and retested.
GCAD?
The one you were just looking at.
This one, yeah.
Have I misread that?
Hang on. What, when you say broken and retested, you mean on the 62?
Well, so I put a quarter theory and an alert on.
Oh yeah, because it's gone right. It's gone down now. Sorry, I wasn't looking. I couldn't see where price was because of my yellow lines. Yes, so that trade is moving now. It's shot down. Well, GCAD is a very fast pair, as we know. The one, they are actually my favourites to trade, but that's GCAD, GA, GN, GJ, and Euro NZD. So here's your 20 pips, guys. Hang on.
I don't have any. It shouldn't be with my stuff.
I'm going to have to.
I don't have any sleeveless ones. I know what sleeveless is there. Yeah.
Sorry, it wasn't Helen talking, but I'm trying to mute out.
Raj, perhaps?
Yeah, I know. Oh, has it got right? Thanks. Yeah.
Sorry, guys.
That's okay. No worries. It's just, there we are. So look at GCAD. So you did have, you see, it's a precise strategy. So you have to put your alert. My alert didn't go off there. It must have just missed it. But it was a very fast move. But Helen's quite right. Did the break and the retest to the pip, and it's coming on down now. So you've already, you will already have your, you already have your stop profit in on this. I think that's what I would be doing. And I'd put my, well, I don't know. I'd probably put my, I'd be moving my stop loss down to above quarter theory and the 62. But it's moved so much now, probably would be putting it just below 1 pip in profit on there. So yeah, when we're discussing trades for entry, and Helen's quite right, bang, it was there, we were on it. You know, you've got to keep an eye on which ones you want to be thinking about getting in, because that's going to do the 20 pips. Or look at the levels that we had, because this is a fast strategy. It's not one often where we've got setups that, you know, sometimes we have to wait for them, but often they can.
For this pair, there was a BYOB down arrow 9 minutes ago.
Well,
so
I'm not surprised. Yeah,
yeah.
That's good. Yeah, I don't do that one, but that's good. And here we are on USDCAD. So that's moved, just what we thought as well. That's going now. So it's coming under the 62. You've had the rejection of quarter theory. You had the rejection of the pitchfork and the pitchfork touch. you've got the trend line forming there, got the lower highs. So some quite nice moves on this session, but quite quick. So I've delivered.
You probably also had a 61.8 fib on those peaks there too.
Oh, okay. Let's have a look at that then. That's always interesting.
You'll have to scrunch it in a little tighter to go to the high of that. This one off the left of your screen there.
Will do. Let's get the fib then. It's, oh, lovely. Off the 78.6, Brian.
Even better.
3 rejections. Beautiful. Very nice. Yeah. So with this one, if you are in it, or you'd be looking at your level on this one is down to 20 pips is 1.63274. The pitchfork there is at about 30, call it 30. Well, no, it's going to be a bit less because it's a buy scan. 1.36200, 27 pips. But if it goes through that level, then you've got your 0% at 40 pips, 1.36077. But it is a buy scan, so you know, it should. But the 0 should be your take profit 1, technically, and then we're always looking to swing to the levels, aren't we? So quarter theory at 1.36 thousand. And then the next zone is down at that 27 to the pitchfork, so 1.35920. Okay, is that enough figures for everyone on that? So I'll just put that back up. I'll put that back up as our 20 pips.
So Sarah, the entry is just at the market right now?
We always do on this strategy market execution. We don't do pending orders.
Right now.
Yeah, so you're probably a bit too far off, in my opinion, to enter the trade now. We you know, bang and we're in, because you need the buffer of the quarter theory and the pitchfork in your red box and your stop loss to protect you. You've got 2 walls, so 2 solid walls there to help stop the market taking you out, you know, taking you out the market. Because, you know, it could come down and test this 15 and decide it's going to turn. It shouldn't do, because it's off that 78.6. So, but it is a buy scan.
What defines it as a buy scan?
Just simply, if I go to the 15-minute, just simply.
Okay, you're going a higher time frame.
No, not that, Jason. It's just that your D point is at the bottom, so your pitchforks are pointing upwards for the buy. So it's a buy scan. Yeah, that's simply all it is. If the D point was at the top, the pitchforks would be pointing downwards, like these ones you can see in the background, and that's a sell scan. It's nothing to do with time frame. It's to do with the shape of the scan.
Yeah, no, I didn't see the D.
Yeah.
Could you say that it was a buy scan, but it's now, as it's gone beyond the TP3, it can be going anywhere now, either back down again.
Our rule is once it's at the median, then it's fair game for a buy or a sell. So on this one, there's the median, that solid white line in the middle. So as price has now crossed, or it's at the median, then yes, we could take buys or sells off this scan.
It's funny, I was going to use that word fair game, but I didn't think it was a technical enough term.
Oh, we use all sorts of words in here, particularly if it starts going the wrong way. Well, we don't.
It's an up and down scan.
Yeah, so that one's coming down. So let's look at something else. We're coming up to the end of the session. If anyone's got any pairs they want us to look at, then please ask. Let's pick EN. That's another fast one. Again, you just have to decide what pairs suit your style of trading. If you're going to trade USD Chef or USDCAD, you'll be more, perhaps newer on your journey, or you'll prefer a slower moving pair because they'll move slower. And these ones, as you see, they just take off, and you don't get into trades on the pairs I'm looking at. If you just want to get 10 or 13 pips, you get into these trades because you want to do the bigger pips, but they are faster. So, you have to bear that in mind.
Well, I've been catching good pips on ACAD, and I got a few good ones off of Euro GDP, like the slowest moving pair in Forex.
Well, that
this week.
I don't know how you do it then, because I just haven't got the patience for Euro GBP.
Well, it was in New York session, so I saw it, and I just sit there and do what Chance does: go watch YouTube videos and check on it every once in a while.
Well, that's a very good point, actually. I suppose I could do a bit of that. So this one, we've got it coming back into its scan.
Oh, and there's our buddy Bart again.
I've got a later scan as well.
I knew. I'll have to draw it up then. Yeah, we're coming up to the end. I can't draw it on this session. I've got a D point of the 16th of June.
Yeah,
there's a much newer one than that.
24th, yesterday. No, yes, yesterday at around 1700 hours. So, yeah.
Is it a sell scan or a buy one?
It's a sell scan.
A sell, yeah.
And the X point's at the 24th?
No, the D point. The D point would be either that big wick or one further up the...
Oh, here?
Yeah, or further up.
Further up.
Yeah. The highest point to the right. No, the highest point to the right.
Yeah, up there.
Yeah.
So is the X point there at the 21st of June?
The X point I've actually got as the 11th of June. It's a huge scan.
Oh, right. Okay. That off that D point there on that old one.
Yeah, that's probably the one that I noted when I posted it. It said, yeah, it covers the previous 3 scans.
Wow. So,
massive.
So just tell me where that, so D point there, X point 14th of June or further down here at the 17th of June?
The X point is the 11th of June.
Yeah, where's the A point?
Sorry, A is 17th of June. Yeah.
That's that one.
Yeah.
And then B is that 18th of June at there?
No, it would be the 22nd for you, like 1 in the morning.
So I've got that as the 21st of June, that one. Just after market open.
Yeah, it was. Yes, it was that big gap day. Yeah.
Yeah. And then down to the 22nd of June.
Yeah.
Correct.
And then up to there.
Yeah, 24th at 5 o'clock. So it'd be 6 o'clock your time.
That's it. Yeah.
Yeah.
Okay. So just quickly put the pitchfork on. Let me fade out this. And just correct these points, and we'll just finish off by looking at this one. Right. Oh. That's it. How's those two other trades, USDCAD and GCAD? What are they doing at the moment?
Hiya. GCAD just stopped me out.
What? Oh, it shot back up, did it?
Yeah.
Did it reject off that 15 EMA line?
Sorry, I haven't got that switched on. I can't tell you. It's going up fast now.
Yeah. Where did you have your stop loss then?
2 pips.
Right.
I was a bit late getting in because I was just I was watching it, but I wasn't sure because I hadn't got it all quite marked up the same as you had. So
yeah,
I didn't get in till.
Right. So no harm done.
No.
But it is a fast pair. Yeah. So it will do this. And there's those 2 pitchforks, but it probably will come back up to quarter theory or the 62. Let's just yeah, it's a bit of a judgment thing with where you turn when you move your stop loss to stop profit and where you put it, isn't it? Because particularly with these faster pairs. Let's just get this one.
I got out with 10 pip profit, so I'm happy.
Oh, well done. Brilliant.
Yes, I should have done that rather than just letting it run.
So that's well, this is what I mean. It's only at least it wasn't a loss because it's only practice.
Indeed.
And the number of times I've missed out because I've had my stop profit too tight, but it's practice, isn't it? You know, it's getting that judgment of these faster pairs will swing wildly, but you can, if you get the perfect setup, you know, you can get very, very good pips off them. But 10 pips is good because you've got 1-to-1. Well, that's 15 pip stop loss, isn't it, on a GBP pair? Right, just find where that is, and then we'll finish. So what have we got here? We've got lovely. Look at there. There's a lovely entry there, which is the rejection off the. That's the best setups you can get when you get the rejections off the D point. Wait for price to come below the 62. Wait for it to come below quarter theory. And when it's under that 62, anywhere along here, that point there, this actually moved in Tokyo. Very nice drop. You could have followed that all the way down to quarter theory, stalling under, still stayed under. Broken, retested the pitchfork there on the 62 down to the next level. Oh, that was a very nice move there. So at the moment we've still got a downward momentum on that trend line, and we've got just put that up there. So we've got a sell scan. We know, let's move that. I know
you got your magnet turned on again.
Oh yeah, I know Brian's going to say, Sarah, stop fiddling with your trend lines. He knows I do fiddle with them. It's a very strange habit of mine. I don't quite know why I do it.
Thank you very much.
Oh, you're welcome. We're going in a minute as well. I'll just
see you soon. Okay.
I'll just
call that green one good and be done with it.
Yeah. Good. I'll just set this one up. So we've got. I just wanted to. Didn't want to do that. I just wanted to measure the pitchfork. So it's 76. So we can take a quarter theory trade. So what have we got as a setup? We've got price. We've got price coming below the 62. We haven't got a pitchfork touch, but we have got the rejections off the trend line. It's respecting that, and the scan is over. The pitchfork leg is over 60 pips. So if you put a short position on there and have 15, ideally you'd want to cover your, that's too big for me, you'd want to cover your pitchfork ideally. So it's a bit rich on the stop loss, but that's the setup off that 1.74500 is your quarter theory, and this is a very fast pair. But you've got the downward trend You've got price below the 62. You're waiting for the break. I would wait for a break and a retest off here. And I can see exactly running along here. There are two pitchforks, a green and a purple. And that's exactly going to be at that, oh, that's at 30 pips. That's interesting. So you might get 30 pips easily out of that. Sorry, that's trading view glitching. It always does that. Where's the 20 pip mark? Here. So 20 pips. Now, interestingly, that 20 pips, you've got little stall out area there. It is a fast pair, remember. So, and I can see two old extensions for pitchfork up above quarter theory. So that's quite nice in terms of protecting me on the trade. And I'll just move that over there. So your profit level would, your stop loss would be 1.74657, thereabouts. And then you'd be looking for 20 pips at, I'm just looking at that stall out zone, which is about 18 pips. So 1.74330. If it doesn't stall out there and breaks that level, then you've got two pitchforks down at 1.74250, thereabouts. And if it breaks that, you've got a very nice take profit level at 50 pips, where a quarter theory and pitchfork are crossing, which is one of Chance's favourite take profit levels. And that is at 1.74 thousand. Okay. So that's it for today then. So we've run over a little bit, made up for being late the other day as well. And I do get addicted to drawing fibs, and you shouldn't really, because Chance doesn't always like them, does he? So they can
but when they're there, they're really good.
When they're there, they are really good. So that is too big. I like the visual dashboard they give you for the profit levels. So there we've only got it off the, haven't got it quite up at the 61.8. So that's why, you see that zero line is that stall out level. So you might only get 17 pips or whatever it was we said before it decides to turn back up. 1.74324 is your zero level where it stalled out before. Would you agree with that, Brian?
Yeah, it sounds reasonable.
Yeah. So if it did that, then that would be, yeah, that's 17.8, 18 pips. So beware of that. Yeah, that's the sort of thing I would be looking at myself because of what's gone on before. And there are two pitchforks running exactly where it prices fell to break through before. Okay. So if you want me to go through the figures, I can. We are over time. Otherwise, I'll call it a day.
I've written them down, but could you just confirm them?
Yeah, I've got entry at 1.74500. Take stop loss at 1.74657, and the first take profit at 1.74328. Second take profit at 1.74209, simply because there are two pitchforks running down there. Minus 27 is at 1.74094, which is 40 pips. And a brilliant take profit level at 50 pips at 1.74000, because that's where the quarter theory crosses the pitchfork. Okay, but its first key level is to see whether it breaks this previous 17 pip level. Yeah. Makes sense?
Yep, got that. Thank you.
GCAD's on its way back down again now, Sarah.
Yeah, well, you know, this is what I say. You know, when you trade with me, my favourites. In fact, Brian and I make a good combo from that point of view because he's got the patience to sit in the smaller ones as well. I like to try and perfect, and I say try because I don't always get it right, as you know. I like those 5 fast pairs, and I just you know, really like them. But you do have to, you know, you do have to take it on the chin sometimes with them, because they are GA. I find the wildest with me. I just think, oh my goodness. So I try not to do that one too often. But look at that, it's already, you see, that's what I love it, because we've been on an hour and it's already done its now done off that quarter theory. It's down at 17 pips already, and it's shoveling down to that first take profit level. But that's the thing, you see, on a fast pair, there's quarter theory. So as I said, I'm pretty sure I said it, I would have thought about keeping my stop loss. I wouldn't have moved it once they'd gone 10 pips straight to 1 pip. I usually do 1 pip, not 2. I can see 2 pitchforks there, so fair enough. I would have thought that would have held it, but it didn't. It's a fast pair. It shot above the quarter theory and the 62. And it slipped up there because they what time was that? Yeah, on the hour. There's your fake out hourly candle, designed to try and take you out the trade and make you think that you've got it wrong. And that went up above it 3.8, call it 4 pips. So if I'd been in this is what I'm trying to learn, that I don't immediately with some of them move it to 1 pip after it's gone 10 pips, particularly on these wild pairs like GCAD, that I keep it 3 pips behind the 62. And if the 62 had been there, and you've got to have your broker spread and commission as well, that would have been 1.4, 1.6. So even if I've had it 3 pips, it might have taken me out with the broker spread and commission. You've got to give it room to breathe. So, and it's the hourly candle. So I've learned a little back testing lesson here, that if I'd been in this trade at that point and the 62 was there and I could see the hour was coming up and I know it's GCAD, then I might have given it 4 or 5 pips above the 62. And this is why I trade off the big computer. I never ever do my setups and trade on my phone, and Chance doesn't either. He uses this as his dashboard and he uses the phone to take the trade, because you've got so much better control. So then after it had done that, then I would have been moving it down, you know, after the hour and after, but, you know, and then judging it here, because I've been caught out so often these bigger pairs when Chance has said, you don't come into these faster pairs to walk away with 10 or 13 pips. And then you start pulling it down to your 5 pips for 1%, 10 pips for, sorry, 5 pips, and then 10 pips for your 1-to-1. I know this has got 15 pips on it, because you know, but just for the sake of being quick. And then you know, you're pulling it down like that. You've got to make your judgment though. So I might even still, if I wanted to try and swing this, I'll be watching this level very carefully. We'll just stay on for this. If everyone's going, that's fine. But I just want to sit, because this is a critical stall out phase. But what have we got going for us? We've got the orange line is coming down with a very fast momentum. We've got price really fast coming down, and we just want to see what happens at this stall out level. Because if you get the same as all these stall outs, I'd be out the trade, because it's probably going to do that again. There's no guarantee it's going to go to those profit levels that we've spoken about. So I'm always looking left to see right, looking at the history here. And if it breaks that key level, then I think, oh, good. Now I'm going to be looking at that minus 27 level down to that quarter theory. Okay. And again, that's what I love about this strategy. You've got the visual dashboard so clearly in front of you. And I think it gives you a lot of confidence, because if you only made, and Brian will remember this from Chance the other day saying it again, if you only make an extra 1% on a trade, just 1%, and this is the preciseness of this. I mean, over the year, if you did 1% on one trade a day, 5%, I can't remember how he worked it out. Was it 1% a week? It was 1% a week.
I think it was an extra 2% a week over the course of a year adds up to 100%.
So you've doubled your account, thank you, Brian, over the year. If you just did an extra 1% on 2 trades out the whole week, That was right, wasn't it?
It was something very close
Something
to
like that, yeah. But it was incredibly powerful at what he said. It really resonated with me. So being able to move your lines exactly and squeezing out 1% just over 2 trades will double your account over the course of a year. And I found that phenomenally powerful. So it's still moving down here. I think I'm going to call it a day though because of time moving on, and stop sharing now. Something in the chat there. Is this a pending order? No, Sean, we never do pending orders with this strategy. We only do market execution on this strategy. And Tom took 10 pips too. Thanks. Brilliant. You're welcome. Okay, that's great. So I'll just stop recording.